This crypto shakeout is unlike anything I've seen before. It is one of the more difficult ones to navigate around within this particular crypto cycle. It's been harder to read than the rest, and it's caught a lot of people off guard. So we have a whole lot that we have to look at in today's show. Make sure you smash the like button, hit the bell notification, and subscribe to the channel. And let's get straight into the show content. I have a lot to go through. We're going to go through as quick as possible, and then you can be well on your way for the rest of the day. So let's have a look over here. Banter bubbles on the daily, pulling back over there, hourly starting to push up, weekly still holding up, monthly still holding up, and essentially that's the picture. Top gainers for the year still remain meme coins and one or two real world assets. We may start to see a shift from this sector or these sectors into a little bit of AI. We'll also have a look at that in today's show. But the question is, what are you betting on? Are you betting on the correlation of Bitcoin to the stock market or the decorrelation of Bitcoin to the stock market? Because if you're betting against crypto, well, you'll be betting on the decorrelation. And the reason being is currently you have the S&P 500 and the NASDAQ pushing up near all-time highs. NASDAQ slightly lagging, but the S&P 500 is very, very close to putting in those all-time highs once again. It's literally a marginal tick. I mean, can you even measure this? 0.32% away before the S&P 500 breaches into all-time highs. Dow Jones is literally at all-time highs right now. And the question is, when will crypto recorrelate? We've spoken about the similar relationship or the correlation between Bitcoin and gold, and how typically gold leads first, breaking out of that massive cup and handle formation, which has huge implied targets for gold, and Bitcoin is putting in the exact same pattern. It's just lagging it ever so slightly. So it's actually a pretty easy blueprint if your conviction is high that that correlation will remain. Remember, we looked at the VIX, the volatility index, when it did spike up to these recent highs over here on the yen cash carry trade, which started to unwind. It spiked all the way up to 66.35, the third highest that we've seen, and now it's recontracting. This is what you would expect, which creates those massive bull markets, right? We spoke about this presenting an enormous buying opportunity, just like it happened in all those prior times, and now it's all leading up to one big week, right? We do have, of course, the Fed funds rate and the FOMC statement, which is going to be coming out, and the interest rate cuts, all of that lining up for tomorrow. While a lot of our indicators are showing a big move is brewing, we are approaching the apex, right? So there's gold. That's the long trade that we're in. This will take you to the top of the measured move of the cup and handle formation, $2,774 for gold. And when will crypto catch up? Well, I think crypto could catch up when we see acceleration of the breakdown on the DXY. I've marked it off at this level over here, 100.55. That will confirm the next leg down, and that probably happens right around that FOMC and the interest rate cut, which is going to be coming up tomorrow. So within the next 24 hours, I'd expect probably acceleration and a breakdown from this level. Now, we're not going to play a guessing game of whether it's going to be 25 or 50 basis points. At the end of the day, we're treating this as a high volatility event, and that's all that you need to focus on, right? Expect volatility when it comes into this major event. And you can see over here, expect volatility, right? Because the volatility index is contracting lower and lower for Bitcoin, similar to what the VIX has done. And that shows you we are anticipating and waiting for the next major move coming in the market. Here's your high time frame chart, keeping it super simple, 2-month time frame. Your support resistance flip. As soon as we do start to flip this on a high time frame, meaning you're starting to see high time frame candles closing above $62,000 to $63,000, then you can say this level's flipped. And it's been a long time, 2, 4, 6, 8, 10 months of attempting to flip this level, bouncing around, oscillating around that key level, confusing both the bulls and the bears. This is what's made it tricky within this particular cycle. And eventually, when this level does get flipped, you can expect that you should get that parabolic advancement, which is similar to what we've seen following the halving cycle in previous times, right? So from Quinton over here, he says the average Bitcoin cycle starts 170 days after the halving cycle occurs, and it tends to peak 480 days after that halving cycle. Currently, we're sitting at 147 days after the BTC halving cycle. And then you have Bitcoin, here we go, Bitcoin decentralized, commenting below as well with a pretty interesting analysis, looking at the block heights. And he says, therefore, the Bitcoin cycle is projected to start around the 6th of October 2024 at a block height of approximately 864,480, and then it will peak around August the 12th, 2025 at a block height of 909,120, and that is pretty much spot on in alignment with everything that we've been looking at. So you should expect the magic should start to take place very, very soon. If you're not exposed to the market, is now a good or a bad time to buy? Well, if you simply use the risk metric over here and look at the various different risk levels, of course, the best times to buy are going to be around that 0.0 to 0.2 level, and that is where we were explicitly buying Bitcoin around the lows. You can go back to any of those the shows, at least, that I put up around this time period between November and December, and that is where we flip mega bullish. Well, right now you are printing a 0.4 to 0.5 on the risk curve, which presents, kind of somewhere within the middle of the market cycle, which is exactly what we expect, right? This is a mid-cycle correction, and therefore, yes, it is still a decent time, but you probably don't want to be taking on more risk than you can afford, because if you're entering for the first time, where is your invalidation? That's always the most important thing that you need to ask yourself. So as per this, yes, it's still okay. You can still look to accumulate. This is likely a reaccumulation range, and prices will most likely go up. So as you can see over here, just again touching on this tweet over here, around that 170 days after the halving cycle is usually where things start to accelerate, right? This is the acceleration phase. We're still missing that part of the cycle, right? We're missing the rapid acceleration. We have not yet seen that particular part of the cycle, which presents pretty much the final buy the dip opportunity, should this time be a repeat of what we've seen in the prior cycles. And you know how the saying goes, this time's different. And you know how that saying ages? Usually not very well, because it's very rare that this time is different within markets. The psychology remains the same, and it has for thousands and thousands of years. Humans are ruled by fear and greed, right? The carrot and the stick approach. It's just a question of which emotion affects you more. Well, at the end of the day, we expect that the emotions should turn in exactly the same way that they always have previous times, and then we're looking for that final leg up, which you would expect when risk returns. It's going to return very, very, very quickly. So you probably want to have your positions established. And what's interesting about the time frame lining up over here, which could be approximately, between anyway now and the middle of October, where we start to see that markup phase, is in 2 weeks from today. CZ of Binance is back, right? He's going to be released from prison, which is just wild. I mean, one of the richest people in the world coming out of prison over there. Here you can see 4. Remember 4. Let's see. Watch for meme coins called 4 leading up into the next 2 weeks. Probably you're going to see some of those CZ coins run. So if you are a true degen, look out for some of those coins in the meme coin sector. Now you can see the total cryptocurrency market cap on the 5-day time frame starting to slowly turn back these moving averages. I have the 3, the 9, and the 30 MA on here, and we're still waiting for a break of structure. Remember, this is also still a massive cup and handle formation, so we're waiting for the break of the handle to bring the risk back into the market, and that's where we start to expect rapid acceleration. The interesting thing about the cup and handle formation is that when you do play out these cup and handle formations, well, you typically don't play them out like this, right? You don't play them out like this, where it's slow and steady to meet the implied target, where it will take years and years, but instead you expect rapid moves straight to the $4 trillion mark, and that will bring massive inflows back into the market. So while we wait, while we prepare for the next phase of the cycle, get your positions ready, study the market, look for the strongest performing coins. Typically things that are outperforming both Bitcoin and ETH are going to be the best things with network effects, with strong on-chain metrics. Get your strong picks out and prepare. And if you don't know what I'm talking about, well, also make sure that you join Whale School, right? Because we are taking up signups. This is an example of one of the workshops. You do get to interact with me live in the workshops.
There's bullish or bearish divergence on, say, like the daily time frame. How far out does it take for that to usually come into play?
It's kind of dependent, because based on what price action does, it can invalidate the bullish or bearish divergence. Remember, it's, let's say, like the divergence is prices moving up, high highs and high lows, and whatever oscillator it is that you're looking at is moving down. So if the price doesn't move in the direction that you're looking at, and the oscillator does start to break back towards the upside, then it would be invalidated. So you kind of need to monitor both the oscillator and price, but usually it would play out on a daily time frame within about a week. All right, guys, so there is a link in the description below. If you go through here to Whale School, click on that. It is entirely free. Just to remind you, you have 8 days, 5 hours left to join. Those are some of the interesting questions that I get. So if you do want to dig deeper into trading and analysis, technical analysis, investing, and how to short-term trade, this is going to be the course for you. It's all of my knowledge compacted into one course, which you can go through very, very quickly. You can work at your own pace. Most of us, we do it over about a month, but if you want to, you could do it as quick as a week. So prepare, go through it. I talk about how you can time the cycle top, how you can exit the market on time, and how to build a rock solid portfolio. Now, let's continue on over here with the Bitcoin analysis. One thing interesting is the stochastic RSI is starting to tick back towards the upside. And remember, we did work out all of these previous times what tended to occur. So we can probably make this nice and big for you to see. There it is. These were the previous results. Feel free to screenshot that. And I measured out both in bull and bear market environments. And most of the time, it led to pretty substantial moves. You can see 109, 54, 47, 295. The fifth one failed. We had 270%, 139, 16% even in a bear market. The ninth one failed, 103, 93, 19, and 30. So pretty high hit rate, pretty high targets. Now, if you were to see something within that region, let's measure out. I'm going to give it an average of about 50% towards the upside. Well, where would this take Bitcoin if you did play out this move into the next confirmed local high? Well, that would be about $88,000, which is pretty interesting. Very, very interesting as a price target, taking into all-time highs. That should catch you up to gold as well as the stock market, which is currently breaking out. So that's one thing that I'm looking at. Remember, we also have had a look at the effect of the rate cuts on the markets as well as recessionary environments, lining up that with an election phase as well. But given that Bitcoin, hasn't been around for that long, it's better to look at this on the stock market. And pretty much what we've seen is there's only 2 or 3 occasions in the very, very long history of the stock market that the rate cuts resulted in price action continuing towards the downside. Our summary previously was that this is a 50-50 thing, right? When it comes to the rate cuts, being fearful that the market is going to crash down further and further, because you'll see the bear posting around that on X as well as on YouTube. People will be reporting on that. I can tell you that the data is inconclusive. You don't have enough of an edge when you look at something like this. It is 50-50 within the markets. But one thing that has a very, very strong high hit rate is the election phase, right? And we've spoken about this before. Here is your 2012 elections when Obama was elected, so leading into the elections, and then as Obama gets elected, of course, a massive move up, right? 2016, when we went into the election phase, started to grind onwards and upwards. Trump got elected. What happened to price? It goes absolutely crazy, parabolic. Here was your rate cuts leading into COVID. One of the rate cuts, of course, marking the exact bottom. 2020 election, price starts to move up. They bring quantitative easing back on steroids, and Joe Biden gets elected. You have a double top scenario over here, hit the peak, come down, create another peak over there. And currently, we're about to move into that phase as you currently have price caught within the parallel channel, heading towards the downside over there, leading into the US presidential election. This is the 4th of November, right? 4th or 5th of November, I think, is when it's coming up. So do mark that off. That means that we're nearing a very, very interesting point within the market cycle. Now, a lot of people are hyper-focused on the rate cuts and the times that it was bad, right? 2007 and 2001. One, of course, being around that whole 9/11 period. The other one being around the 2008 stock market crash. And these ones resulted in bad returns 1, 2, 3, and 4 years later. But if you work out the average and you look at all the other times as well that they had the rate cuts, well, you can see that it was pretty favorable 1, 2, 3, 4, and 5 years later. You had an average of 11.6% higher for the stock market. 1 year later, 23.6% higher. 2 years later, 36.3%. 3 years later, 48.8%, and then 59.4% higher. So typically speaking, the stock market is likely to continue onwards and upwards. Now, how will this affect crypto? What's interesting over here is this tweet over here from Scott Mulker. He says Fed rate cuts could actually ignite crypto lending markets, as per Bernstein, right? So remember, when they start to cut the interest rates, remember that most money markets are not going to be providing the same level of yield, right? per year. So the money markets, or at least not the money markets, but the DeFi lending yields within crypto typically attract these players into the market as a viable alternative, at least to diversify some. Some of those money markets we spoke about at $6 trillion worth are going to move into the stock market. That's going to continue the stock market run onwards and upwards, and that will flow into crypto. And naturally, degens are going to start to find these yields. That happens every single cycle. When the yields start to get too high, that's where you want to become very, very careful, right? Things like 30, 40, 50% year on year. That's where you want to start to become careful. But nevertheless, expect some of that to move into DeFi. And if you look at ETH over here, well, ETH is still getting crushed, ETH BTC at least, capitulating right now. Wait for a shift in trend. If you look at the ETH USD chart on the right hand side on the 12-hour time frame, well, you're attempting to put in a high low over here. Break of structure will occur if ETH can get above 2,443. That is your key zone to possibly start to reverse the trend over there. Now, if you look at the average true range as well, it's currently caught within the symmetrical triangle. It's approaching the lower boundary of that upsloping trend line, and we can mark off what previously happened when the average true range got as tight as this. Well, we had this move up over here, we had this move up over here, you consolidated a bit, you led for the next big move up, slight correction, next big move up, and then in two, or at least actually it's only one occasion, did it lead to a down move. This one hit the top boundary over here, that led still to an up move, and now you're coming back down, showing low volatility, smaller and smaller ranges. As those ranges get tighter and tighter, you expect a bigger and bigger move to come, and the FOMC and interest rate cut could be, I'm not saying it's guaranteed, but it could be one of the catalysts to look out for. So here you have Bitcoin attempting to breach back above these key levels and flip that 9 and 18 exponential moving average bullish. Currently, as it stands, well, that is exactly what's occurring over here. Let's just quickly hide the price action over here. You can see you have got the bullish cross, right? But now it's up to the bulls to continue to maintain price action at these levels and defend the zone. If they do, then you could start to put in your next higher low at this current level, and then possibly push price up for the major zone, which is going to be $65,050, right? So that 65K level, that will create your first daily higher high. At the moment, you are putting in high lows, but we need to see the daily higher high. So be careful over there, because if we do start to break down from here, there is also still the possibility, that this could be your next lower high and you could go down again. So that is something I do have to warn you of. Despite the timing of where we're at within the cycle, it is something to possibly look out for as well from both the bull and the bear side. Okay, that's your 4-hour time frame. Remember, guys, your job within the space is to remain safe. The only reason I bring this up is because I keep getting DMs of people that have been hacked, right? So remember to use your NordVPN. Mine is currently on. I can put this on over here. I have a double VPN on right now as I do the stream over here, which means you have a VPN within a VPN. So you can choose any of these different countries if you want. This is not only beneficial for crypto, but sometimes if you want to get something cheaper, you can say that you in a less wealthy country like Vietnam or like Thailand, and then you can get things, you can actually buy things for cheaper because it believes that you're in that place. But more importantly, you can protect your crypto, right? So if you use the link that's in the description below, it does qualify you for a bonus. You'll get up to 73% savings. The VPN will cost you $3 a month, literally less than the price of a coffee, and it makes it very difficult for hackers to hack your account when you are using a VPN. All right. Now, I just mentioned that AI may be one of the sectors to heat up. And if you look at the key takeaways from Singapore, right now, AI seems to be the most exciting vertical within the market. So we do need to keep our eyes on AI, because if you look at the top performing alts of the last 30 days, they are the AI sector, right? Or it is the AI sector. We have Fetch, Theta, ICP, Tau, and Render pretty much on a tear over here. So we'll focus on those a bit more over the coming days and weeks as we look to establish more long-term positions. For those of you who want the exact trades and portfolios that we're in, remember to jump into Whale Room. That is where we're dropping all of the alpha. I also do want to let you know that Trump has now pretty much his project is going to be an NFT or non-transferable token, 63. He has better tokenomics than some of the VCs, right? 63% of the supply is going to be sold to the public. 17% is held for user rewards. 20% will be allocated to the team, and the token is going to be restricted to accredited investors in the US unless you want to use a VPN, right? Then you're going to be able to buy it anyway because it will show that you're in another country that's not restricted. So let's continue. Okay, Popcat, still one of the top performing meme coins over here. Let's have a look at a couple of the others. Let's quickly run through the AI sector, which has been heating up over here. So we have been looking at 𝗕𝗏. We said that 𝗕𝗏 is currently range bound within these two levels, pretty much between 216 and on the top side at about 350. Needs to break above 350 to continue onwards and upwards over there. Another one I have my eye on over here is EOS. It hasn't yet bounced out of this region. We have not got a trigger long for this yet, but it's coming into the key zone. We'll keep an eye on that. Let's look at AI tech. Similar to EOS, grinding into that low region. XAI looks terrible. I wouldn't touch that. Okay, if we look at Akash also, a lot of optimism around this coin fundamentally for the long run, but chart-wise, I would wait for the trend to shift. This is still a strong downtrend. You know, something like 𝗕𝗏, it may be you're lagging this, essentially big strong move down, then starts to break its down sloping trend line and range for a bit. So watch for something like that. If you do want to get exposure to Akash may already be forming that range over here, which 𝗕𝗏 is already creating, right? Something like this. And if you can buy it near the lower boundary of the strong horizontal, that's going to be $1.80. That's going to be the sweet spot. Let's look at Render. Same thing, Render starting to range. So you are seeing a notable shift over here. You got Aether broke down this level, needs to do some work to get back above. This is a key level to confirm some sort of a deviation. It would need to get back into this zone over here, which you can see currently, unfortunately, those candles are rejecting, right? So likely to come back down. Watch for the high low or the lower low. It's going to create one of those at those key zones. Let's quickly scan through what else have we got over here. Okay, meme coin sector, I think we went through quite a lot yesterday. Marga is starting to move. Okay, not much. It's 18%. It looks like a lot on the right-hand side relative to the rest, but given you know, the size of each candle, it's not actually that big. All right, let's see any other ones over here worth noting. Let's quickly look at Solana with a breakpoint. I don't think Solana's reacted or moved at all, so it's having a slow grind within this region. The time to accumulate was at the bottom over here at 120. If you're not in on this, I mean, you'd have to probably make up with a leverage trade, but it becomes really, really dangerous. You'd need to go into the low time frames. Let's just observe and see what's happening over here. So possibly you're going to create your next high low over here. If you look at the 4-hour time frame, you are putting in high lows throughout. So this would need to get moving very, very soon if Solana wants to continue. If you do want to take any of these trades, most of these coins, by the way, are listed on BitGet. So use the link below. You get up to a $30,000 sign-up bonus if you use that link. And then hardest, if you can just put on the screen the Banter Bags giveaway. By signing up to BitGet or any of the other exchanges that are listed below, you'll be put into the Banter Bags giveaway, which is where we give away seed round investments. We invest into all of these various different projects like Saga, Trueflation, CTA, Zero Land, 𝗕𝗏𝗕𝗏, etc. Projects that are fundamentally strong for the long term. And ultimately, each sign up that you have is an entry as a raffle ticket, and we'll be giving those coins or those bags away. They're typically worth hundreds of thousands of dollars, just by the way, each. So the total Banter Bags giveaway is typically in the millions of dollars when we eventually give it away. We typically try to give it away towards, you know, the final phase of the bull market. Why? Because that's when they're up the most, right? Which means that you'll get the most bang for your buck out of those bags. So use the links below, sign up. Everything is explained in the YouTube description. And that's it from me, folks. I will see you all on the next one, which is tomorrow. I hope you all have a wonderful day, and cheers for now.